All right, lots of numbers to take cognizance of. Welcome back. You're tuned into Market Fatafat, and we're taking you through all of those movers and shakers. Let's bring on board Osho Krishnan, who joins in on the technicals from Angel One. And Osho, clearly there seems to be only one prominent listed player in the aviation space, and that's Indigo or Interglobe Aviation. With all that's playing out with Go First right now, what do the charts look like for Indigo?
Good afternoon, everyone. Well, overall, the technical setup for Indigo has been very fantastic. It has given a breakout from the levels of 2150 zone, and from there onwards, it has been on a stellar bull run. And as of now, we are expecting another 2 to 3% of rally on immediate basis, because on technical parameters, the counter has already entered the overbought region. But because of the news flow, which is very positive for the Indigo counter, so we are expecting that 2350 to 2370 should be tested in a very short-term perspective. But one should not become very much complacent in this counter and try to book their profits at higher levels of 2350, 2370. On the other hand, if there will be any minor correction towards 2200 zone, then one should also look for opportunity to accumulate this counter.
Let's move on and then talk about MCX. Now, this is according to channel checks and reports that we have, that is indicating that TCS integration is forefronted and is done, but backend has a lot of bugs which need to be worked upon as well. According to the channel checks with the industry users, indicated that it is too difficult to complete the same by June, and post removal of the bugs, it requires to be on the pilot testing for a month. So according to the channel checks, it's further suggesting there is a likelihood of more request by MCX for another extension of 6 months as well to 360 moon. So keeping an eye out on MCX as well, and hence a huge extension in terms of the cost to the tune of 160 crores may be incurred of this rupees 50 crores to 60 crores will be in the current financial year, which can have a significant impact on the earnings. So on the back of this, we're keeping an eye out on MCX.
Okay, let's move right on then and discuss stock number 24. Osho, why is Cyient featuring on your radar?
Cyient has witnessed a 52 weeks breakout, and from the highs of October 21, this counter has seen a significant breakout at the levels of 1200. So from here onwards, even the mid-cap IT is gaining some kind of traction from past 2 to 3 trading sessions. So we are expecting that from here onwards, after the recent breakout, one can expect a decent rally in this counter. The immediate resistance is 1280, followed by 1340 zone. So one should definitely try to accumulate this counter around current levels also for the immediate target of 1280, and even for short-term perspective, 1300 and 1340 can be seen in the positional basis.
All right, there you have it. That's the view coming in. Let's move on then and discuss the next newsmaker. Skipper is in the spotlight, and yes, yet again, it's an earnings candidate. The company's revenues have come in high by 19%, 657 crore rupees, and the EBITDA as well has been healthy, 72 crores versus 62 crores last year. Although the net profit is absolutely flat or lower by 3.5% at 24 crores, and margins too have come off to 10.9% versus 11.1%. Let's hear it out then from Sharan Bansal, the director at Skipper, who expects FY24 margins to improve.
We have delivered an operating EBITDA of plus of 11% this year compared to less than 9% last year. This will be led by more and more export execution. We have seen close to an 80% increase in exports. With this export growth, we will continue to see margins improvement, and of course, in the overall demand improvement, we should see that effect on the margins. You should expect 11 to 12% EBITDA number from the company, which has been our historical trend.
And IOC has come out with their numbers. Seems like an interesting and surely an up move in the stock price as well. Lisa, break down the number for us. How are they looking like? What's the revenue profit coming in as?
Yes, Vinny, very good set of numbers, and the numbers have come out better than expected and very strong. And that was aided by better refining margin as well as marketing margin that drove the revenue. the revenue which was expected, that was expected to decline by 9%, but it declined only 1% and stood at around 2,02,994 crore. Even the margin, what was expected was 6.4%, but it came at around 7.6% versus 1.8% last quarter. And net profit, that was very high compared to what was estimated. 4,443 crore was what the street estimated, but the number came at around 10,059 crore. So yes, as we can see, this stock has seen an uptick after the strong set of numbers.
Yes, indeed. That's the stock clearly reacting and giving a thumbs up to its quarterly performance. Moving right on then, let's discuss another mid-cap IT counter. And Osho, you're clearly pretty fond of this entire space. Now it's persistent.
Yes, as I have mentioned that mid-cap IT has started gaining some kind of traction also. So basically we are looking for those counters where we can see some kind of technical breakout zone. So in persistent, we have seen in a very short-term perspective, we have seen a consolidation breakout. And from medium-term perspective, we can see approximately a flag pattern breakout on persistent. So overall, from medium-term perspective, one can expect a target of 400 points from here onwards. So approximately 5,100 to 5,200 will be the target from medium-term perspective. Whereas for the short-term, 4,900 is the point where one can expect in a incoming near positional basis. So persistent is also looking very positive. One should definitely try to accumulate this counter.
Okay, let's move on and talk about Jupiter Wagons, Vamakshi. What's the news for you today?
Well, Vinny, the stock is in focus after the company announced that they will be raising around 125 crores through a qualified institutional placement, that is a QIP. The QIP, in their opinion, got an overwhelming response from investors like Tata Mutual Fund, Ananta Capital, ITI Mutual Fund, etc. And the funds raised through this QIP will actually be used to accelerate their growth as well as bring on some enhanced manufacturing capabilities. Now, they will also be using the funds for acquisition of Stone India for working capital optimization as well as other corporate purposes. So that is the reason why Jupiter Wagons is in focus today. Now, definitely we're seeing the stock surge up by almost 5% in the trading session today. It is definitely trading near the day's highest point. But since the beginning of the year, the stock has in fact gained nearly 26% today. And in fact, on the back of that news flow, the stock does remain on our radar.
Okay, let's move right on then and discuss the next stock that's on Osho's radar. And no, it's not mid-cap IT Osho, but CG Power.
Yes, from the power sector also there are many counters which are looking very positive. So basically we are trying to focus more on thematic movers. So now coming to CG Power has seen a rounding bottom formation in past 3 months. So it has given a breakout from the levels of 332 on technical chart, and from here onwards one can expect another rally of 40 points. That means towards 375 to 380 in coming 2 to 3 months. So one can definitely look for power sector companies from here on, and we are expecting a decent up move in positional basis of 2 to 3 months.
Okay, check in on CG Power. That stock is looking good on the charts according to Osho.
Absolutely, but let's talk about Jubilant FoodWorks. Aman, we are not getting to eat pizzas right now, but how is the demand for pizza? Seems like it's a bit sluggish, and that is why in terms of the numbers that are expected from Jubilant FoodWorks, we're expecting just a single-digit 9% growth, high single-digit growth in terms of the revenues of the company over there. Keep an eye out on that one. It's expected at 1,263 crores. While in terms of the bottom line of the company, we're expecting a decline of 45%, while operating performance is expected to see some bit of a weakness there as well. EBITDA down by 11%, while gross margins and EBITDA margins are also expected to see a contraction. EBITDA margins expected to see a contraction of around 460 basis points. On what we are expecting in terms of the like-for-like growth, we are expecting a muted and a flat like-for-like growth for Jubilant FoodWorks. Demand softness is something that is impacting the revenue of the company. Gross margins, EBITDA margins impacted mainly by the high input costs as well as the prolonged commodity inflation as well as the negative operating leverage. Let's keep an eye on that one. Like-for-like growth is something that we should watch out for in terms of commentaries there. Demand trends, how is that shaping up? What are the expansion plans in FY24? And how is the performance of Popeyes is something that we should keep an eye out on.
All right, let's move right on then. And Tata Power, that's the next stock, Osho, that you're tracking. And today it spiked up quite nicely, but in the last 6 months, it's been in a pretty tight range, about 180.90 to about 220 levels. What's your outlook on the charts?
See, overall, last month we have seen a breakdown in this counter from the levels of 200 level, and from the lows of 185, the stock has gained some kind of buying emergence. And in today's session, we have witnessed strong volumes in this counter. So from here onwards, one can expect a decent up move. We are not very much aggressive because on the higher end, as you have mentioned, that it is having a resistance also. So 225 to 228 will be the first resistance zone for this counter. And even though because the counter has gained some kind of momentum, so one should not miss out on the momentum because this has been backed by the robust volumes. So one should definitely try to gauge some kind of momentum on the lower end. 208 to 210 should be the demand zone. So there one should try to accumulate this counter. And on the higher end, 225 to 228 is the zone where one should try to book their profits also.
Okay, and we also spoke to S. Narain, ED and CIO at ICICI Prudential AMC, who believes that power is a long cyclical sector and the demand in the sector is going to shoot up in the next 3 to 5 years as well. Let's go cross and listen in.
Many of these companies have done extremely badly in the last 1 year, as you know. And most of those holders which were holding, they actually have been getting out of them in a very, very big way. So we saw an opportunity to look at those stocks as they fell. And they have been the worst performing stocks in the Indian market. And we are not opposed to looking at anything as long as we feel that the embedded value in them becomes more attractive. And that is the framework which we use for investing. And many of our older sectors which we were which we liked a lot, many of them have done extremely well. With our open approach to investing, we thought why not consider them. But if you look at as a percentage of our assets under management, they are negligible. So while the market talks about our investing in them, if you look at the absolute percentages of our corpus, they are very, very small. But yes, we are willing to look at them. If many of the new companies also come in them, which are more, they come at much more cheaper valuations. I don't see why we should not look at them if they come at reasonable value.
That's the view coming in from S. Narain on the markets. But let's move right on. The countdown continues as we're dissecting all the newsmakers in trade. At number 31, HDFC Life is on the brokerage radar in trade. Macquarie has maintained an outperform rating. They've got a target price at 655 rupees, saying that the company is confident of achieving a 17 to 20% growth in APE as well as in VNB. The management has reiterated growth irrespective of the regulatory changes and the heightened competitive intensity. Macquarie also says that HDFC Life has delivered consistently above the industry APE growth and it will continue to do the same. The stock, though, a little bit muted at 556.
Okay, let's move on and talk about, other than those power and IT names, Amara Raja Battery making to your list, Osho, today. What should we be expecting in terms of charts from here? Obviously, we had seen a correction and from that it started moving a bit upwards. What's the upside? What's the target price?
See, overall, we have seen a very strong correction in this counter in the long-term perspective. But from past 6 months, the stock has gained some kind of traction and almost it has made a base for itself because it has been sustained above the 200-day SMA on daily chart. As of now, we have witnessed a breakout from the zone of 615. And from here onwards, from past 2 weeks, the counter has sustained above the level of 615. So that's a very positive development for Amara Battery. And from here onwards, one can expect the immediate target that one can expect is of 665, which is the recent swing high. So one can expect a decent up move of approximately 30 points. That will be approximately 5% in coming positional basis of, let's say, 2 to 3 weeks. So one can definitely look for this counter from short-term perspective.
Okay, keep tracking Amara Raja on the charts. Let's get a move on then and Lisa discuss Pfizer in greater detail. Take us through what exactly is keeping the stock in the news today.
Yes, very well. Pfizer has reported its Q4 numbers and the numbers were in line with the estimates. Talking about the revenue, that was up 4.2% year on year. EBITDA also saw growth of around 9.9% year on year, and that got flown into the margin, where the EBITDA margin that was up 66 bits year on year and stood at 31.8%, and that was helped by the lower raw material expenses. Talking about the net profit, that was up 3% on year basis and stood at 130 crore. Both the revenue as well as the PAT both met the estimates and it was in line. And the company also declared a final dividend of around 35 per share and a special dividend of around 5 per share for FY23. But compared with its rival Cipla posted a 45% increase in its fourth quarter. So Pfizer's number looks quite weak compared to Cipla. So well, as we can see, the stock is trading flat in today's session.
Okay, let's move right on then from Pfizer and discuss GE Shipping. Osho, what is the outlook on the charts? Do you believe it's a compelling buy at the current price?
GE Shipping is in a secular uptrend. It is having a very positive technical setup. From here onwards, one can expect approximately 100 point of up rally in this counter, because even yesterday's session we have seen a major breakout on the back of robust volume. So that has been a very positive development for GE Shipping, because in the past 5 months we have seen a V-shaped recovery in this counter. So from here onwards, one can expect approximately 100 points towards the target of 800 in the coming future. Let's say 2 to 3 months will be the time period that one can expect for an upside of 800 levels in this counter.
So let's move on and talk about HPCL then. Vamakshi, why is this one in focus today?
This counter is in focus today on the back of its numbers. The company came out with a rather strong set of numbers when you look at it on a sequential basis. Revenue was down nearly 1.5% at around 1,07,928 crores. EBITDA, however, has gone up significantly by almost 3 times at nearly 4,799 crore. The margins have also improved from 1.5% to 4.4%, while the net profit has come in much higher. It was at 173 crores in Q3 of FY23, and it has now gone up to almost 3,223. We were also joined by the management, and they believe that they are expecting to maintain the GRMs at the Q4 level even going ahead. So that is a positive that is coming for this counter. They also said that they will be evaluating all options, including listing of lubricant business. In fact, the company is getting an EBITDA multiple of 5 times, while the lubricant business might actually get a multiple of almost 10 to 12 times. They believe that all investments that has been done by HPCL have now started to give returns. So overall, a strong set of numbers. Positive management commentary is the reason why HPCL is in focus today. As of now, trading with gains of around 1% as we speak.
All right, there you have it. That's the view on HPCL. In fact, we spoke with Rajneesh Narang, who is the Director of Finance and CFO at HPCL earlier this morning. And he says that the company is not able to utilize the full value of lubricants, and there is scope for the business to see multiples of 10 to 12 times.
Currently, when this lubricant business is housed within HPCL, what we feel is that the HPCL is not getting the full value out of it. So that's primarily the reason. If you see HPCL, currently the EBITDA multiples which we get is around 5 to 5.5. But the lubricant market, the levels of the market share we have and the EBITDA margins which we make, we feel that we should be getting around 10 to 12 multiple of the EV EBITDA over there. So considering that, we feel that the company's valuation should not be less than 12,000 crore as regards if we carve out the lubricant business of them. We will be evaluating all the options and once we get all the regulatory approvals. But definitely, yes, there is a merit in looking at all the options through which we can maximize the value unlocking in this company. The crude as well as the product cracks has been quite volatile. Only a few days back, maybe 15 days back, the crude prices were hovering around $85, $87 a barrel. They have come down, and depending upon the geopolitical situation, it can any moment jump up and further increase. So we are looking at, we are closely monitoring the levels of the crude as well as the product cracks, and at an appropriate time, definitely that decision would be taken. I said no, it depends upon how the market behaves. The market has been quite volatile. Let some stability come as regards the product as well as the crude prices. Definitely we'll have a look at that moment of time and take it.
Okay, let's move on and pick up an NBFC name on the charts, and that is Bajaj Finance. Osho, obviously from those lows that we saw coming in at around 5,400, the stock has surely seen a recovery now. 6,700 odd, it's what it is at right now. What is the upside that you're looking at for this one? What is the target price that we should be expecting?
See, Bajaj Finance have seen a breakthrough from the 200-day SMA after a very long time. And from past 1 week, it has been sustaining above the 200-day SMA, which is placed approximately around 6,600 zone. So from here onwards, 6,600 to 6,500 zone should be acting as a very strong support for Bajaj Finance. And as we are having a very bullish approach in the market as of now, because the undertone is very much strong in the market, so we are expecting a decent rally, but it will be a gradual rally that we can expect in Bajaj Finance. For the immediate basis, one can expect 7,000, 7,100 on a very immediate basis. But from there onwards, one can even look from medium-term perspective for accumulation or investment in this counter towards the levels of 76 to 7,800 levels. So one should definitely try to accumulate this counter. There could be some kind of cool off that we can witness in the coming time, but that should be utilized to add positions in Bajaj Finance.
Okay, that's the word coming in on Bajaj Finance. Keep an eye out on those levels there. Let's move on and talk about Torrent Pharma. Now, actually, the company announced today that on 30th of May, they will be actually considering obviously the Q4 numbers, but along with that, the company is considering a fundraising plan as well, whether through QIP or other modes as well. So keeping an eye on that one. Post an announcement, we did see a side bit of a blip coming in there in the stock, and still trading at with a downtick of around 2.6% as of now. Torrent Pharma standing at 1,622 rupees.
All right, let's get a move on then and discuss Jubilant Ingravia, which came out with its quarterly numbers. The stock is clearly sulking on the back of that performance. The profits have come in at a meager 52 crores versus 68.5 crore rupees. Not just that, the operational performance has been abysmal, with the company's margins dipping to 7.7%, down nearly 194 basis points. Revenues as well are lower. 1129 crores is what they've clocked in. That's versus 1276 crore rupees, with the EBITDA as well declining to 87 crores, down nearly 30% from the 122 crores that it reported last year. That's the stock clearly reacting to those numbers, and at the lowest point of the trading day or thereabouts, down 5%, just on the brink of the 400 mark. All right, away from that, let's focus in on the next newsmaker, and that is Polycab. It's on the radar of Jefferies. They've got a buy rating that they're maintaining on the stock. They've hiked the target price though from 36.30 to 42.90, saying that they're seeing strong execution yet again. Jefferies believes that the B2B demand is strong, led by private capex as well as the kind of government measures that have been taken. And they view Polycab as a beneficiary of infra and capex as well as a housing revival. The stock price clearly reacting to that at 34.34 on last count.
Okay, let's just look at, in terms of fintechs and digital technology, that is transforming, and the investment landscape, especially in India, is transforming as well. Now, that's the word coming in from Navneet Munhot, the MD and CEO at HDFC AMC. My colleague Anurag Shah caught up with him for an exclusive chat. Let's listen in.
Of course, I think thanks to Jan Dhan Yojana, Aadhaar and mobility, the GEM trinity that got created in India, which provided access to more than 1 billion people to the mainstream financial system. And now in the last couple of years, what we are seeing is, I would call this a Jan Nivesh, though this is not a equivalent of Jan Dhan Yojana. But I think the awareness that it's not only important to save, but also to invest it rightly over the next several years. And I think Mutual Fund Sahi Hai, this campaign, which has created a lot of awareness about investing for long term, along with a good track record of mutual fund schemes over a long period of time, the transparency that this product has, and of course the technology put together, all of these forces have made this possible, that the number of SIPs, which used to be around 60 odd lakhs 10 years back, have reached now 6 crore plus. In fact, in last 5 years, the SIP monthly flows have doubled from 7,000 crores to over 14,000 crores now.
Just that due to the fintech, the average size of SIP has increased, although economy is growing. But does that data suggest that due to fintech, the average size of SIP has increased?
No, in fact, the average size of SIP brought by fintechs is lower than the overall average. The overall average SIP size would be around 2,300 rupees, but the average SIP ticket size of fintechs would be less than 1,000 rupees. Okay. These are a lot of new investors, particularly in the younger cohort. In fact, for one of the large fintech, I'm told that 15% of their investors are between the age of 18 to 23, one of the larger fintech. And the average ticket size is lower for the fintechs than the industry average.
Recent data suggests that the now retail investor is going away from market, that peak has come and now there is not much of scope.
India is at such early stage of growth, how a peak can come. I mean, markets of course would have their ups and downs, but I think as an economy we have a long way to go. As markets, I think we have a long way to go. I think we should not get swayed by the short-term volatility, but as we keep saying, I think the best way to invest is for the long term. I think do the systematic investment, planning, and that's remain disciplined and don't get swayed by the volatility. Make the best of the, take the advantage of the volatility.
All right, Navneet Manod there on ET Now. But on that note, we're completely timed out on this edition of the show. From everyone that put the show together, thanks for watching.